Mortgages are about to change forever. I'm breaking down exactly what is happening, what this means for home buyers, what this means for taxpayers, and how you can make the most of all of this craziness that's going on. But first, my name is Tiffany. I'm a loan officer here in Las Vegas, Nevada. I've helped over 200 families with their real estate needs and would love to help you with yours. This includes things like buying a home, refinancing a home, maybe taking out some equity in your home. I can help with each of these things. So I'm going to put my information in the description down below. So if you're interested in working with me, we can set up a time to chat about how I can best serve you. Also, this is a growing channel and I greatly appreciate everyone's support that's been leaving comments, liking the video, subscribing to the channel, just showing support however you can. I greatly appreciate it and would greatly appreciate it if you did so for this video as well. So if you haven't already, please make sure to give this video a big thumbs up, subscribe if you'd like to see more of this real estate journalism type content, and maybe share this video with someone that might need this information, because the world of mortgages is going to change in the nearby future, and the best thing that you can do is be prepared for it when it happens. So again, share this with someone who might need this info. With that being said, let's get into today's video. This isn't the biggest news that's in the market right now, but it has the potential to completely shake the real estate world. And that is Donald Trump wanting to privatize Fannie Mae and Freddie Mac. Now, I know what you're thinking. Who the heck are they? But it goes a little bit deeper than that. So if you've never heard of them before, Freddie Mac and Fannie Mae are two of the agencies that basically underwrite all the deals that we do as conventional loans here in the United States. And before 2008, they basically did whatever they wanted. Like those no income, no job loans that we all saw, like in The Big Short, that people were doing. Yeah, Fannie Mae and Freddie Mac were okaying those loans. They were totally okay with it. That wasn't like a specialty loan. Like they were allowing that to happen. And then what they would do is they would take those loans and they would sell them as mortgage-backed securities. They still do that, but we're talking about the 2008 craziness that's happening. So when all of that happened, Fannie Mae and Freddie Mac got their behinds handed to them when the market crashed, and those mortgage-backed securities that they were selling that were extremely risky and volatile started defaulting. They needed to basically be saved by the government before they went completely extinct as a company, and the way that we did mortgages really changed forever. In 2008, to help make sure that these companies didn't go completely bankrupt, the government ended up bailing them out for $191 billion. And in doing so, the government was like, hey, you obviously can't handle this on your own. Why don't you stay under our umbrella for the meanwhile if you want our help? We're going to basically make sure that these really crazy loans that you were doing are no longer a part of the standard way that we go about loans here. When that happened, Fannie Mae and Freddie Mac decided to basically take the conservatorship from the United States government for that bailout and have been basically borrowing money from the government and paying them back interest ever since. So basically think of it as a relationship as like a babysitter. The government is basically babysitting Fannie Mae and Freddie Mac to make sure that they don't do anything crazy. So that's why we see all the rules that we see as far as like, be it your job 2 years, you have to show this much on paper, you have to have this shown on your tax returns, like all of these rules that people tend to get bogged down by. It's because the government basically told Fannie Mae and Freddie Mac, hey, you were doing some crazy stuff before. You need to play by our rules now, especially because we just helped you guys out for $191 billion. Like all of those rules that people tend to be a little bit like weary of, it's because of the government's conservatorship in those two programs and those two businesses. But the function of those businesses is still running the same. Like Fannie Mae and Freddie Mac basically operate as mini mints. So if you're familiar with like the mints and how we get our cash and coins and all of these things, that's pretty much how Fannie Mae and Freddie Mac operate, but just with mortgages instead. If you decide to take out a conventional loan, your loan officer and their bank that they work for are going to give it to Fannie Mae or to Freddie Mac, depending on whoever they decided to work with on that loan. Those loans go to what's called a home loan bank center, and they're set up in different cities. There's one in Dallas, there's one in Los Angeles, there's one in New York, etc. They go to those banks, and the people that work at those facilities basically group the loans together based on common traits, like if they had 750 credit scores, or like if they were buying a townhome or whatever that grouping looks like, they package those and then they sell those as mortgage-backed securities to entities that are wanting to buy those as investment. So still same process from 2008. It's just now a lot more streamlined because there is a lot more rules from the government about what they can and can't take as a loan that they're willing to sell as a security. Well, this is not really benefiting the US government because when Fannie Mae and Freddie Mac borrow money, they're just borrowing money, paying their interest and moving along. There's really not a ton of added benefit for the government, especially seeing as though the government is the one that bailed them out to the tune of $191 billion. What is happening now that could be causing this change to this relationship that we've been having for like the last 20 so years? Well, Donald Trump is saying, I want these companies to actually benefit us now. I want these companies to actually bring in money to the government so that way we can actually justify still being attached to these entities in general. And that's where the conversation is coming about making these companies private. Now, when we say private, there's a lot that goes into that word itself. The actual word that we're looking for here is Donald Trump wants to create a sovereign wealth fund and attach these two entities to it. So if you don't know what a sovereign wealth fund is, it's basically the government's way of having a hedge fund. They will, basically take any investment opportunity, whether it's a mortgage, it's a real estate, whether it's crypto, whatever that looks like, they will take that fund and use it to bring income into the government through the form of investment. That is where Donald Trump wants to see these two entities under. They want to see it under a sovereign wealth fund. And what's interesting is that this is actually already being put into motion. In fact, there was a lot of speculation that happened when U.S. Treasury Secretary Scott Bessent appeared to suggest on a podcast called All In that the government stakes in Fannie and Freddie could land in a new U.S. sovereign wealth fund that's already been authorized by Donald Trump. So not only is this just an idea that's in people's minds and, this might happen, this might not happen, Donald Trump's already making plans. In fact, he appointed Bill Pulte to the housing department and he came into Fannie and Freddie and got rid of both of their leaderships and actually appointed himself as the director of both Fannie Mae and Freddie Mac, which means there's going to be even more government oversight into both of these entities going forward here. So they're no longer separate from the government. They are a part of the government. And a lot of the arguments that you're seeing for people that are pro making Fannie and Freddie, private is that doing so could generate the government billions of dollars that could be used to reduce the deficit instead of us relying on taxpayers and the normal ways that we generate income in the US in order to actually help us bring down the deficit so that we don't need to rely on taxpayers. And there's a lot of benefit if we decide to go this route, but doing so can be extremely risky. Let's get into what this means for all the affected people. So first, let's talk about people who are interested in buying a home. So if this happens, basically the interest rates that you see now for conventional loans are set because the Fannie Mae and Freddie Mac are trying to operate at the lowest cost possible because they're really not turning a profit here. They're not trying to turn a profit. They're just basically operating to pay back the government their interest and keep funding these loans. If this happens and it becomes a sovereign wealth fund, the new primary goal for both Fannie Mae and Freddie Mac is to turn a profit, to bring in money into the government and help us bring down the deficit, which means we're no longer operating at bare minimum costs. We are now looking to get a profit. So interest rates are the biggest way that companies end up generating revenue. And so if now Fannie Mae and Freddie Mac through the government are saying, hey, we need at least this much of the interest rate to go back to us so that we can put it into our sovereign wealth fund. That means interest rates will rise as a result of it going private. So if you're someone who's looking to buy a home before this has happened, this is probably the lowest that it's going to go as far as like costs that is actually being, expandable. If you can buy down your interest rate, etc. This also means that the availability of your loans might change. Like right now we have so many options for conventional loans. You could do a 10-year, a 15-year, 20-year, 25-year, 30-year. We're not quite at the 40-year yet. I know I see a lot of people talking about if that's going to be a possibility, but we're not there yet. 30 is still the number for us. But if the government decides, hey, we're operating now purely on costs, that means they're trying to probably maximize the amount of interest that they're getting. But they might also decide, hey, 30 years is way too long to get our money back. Like maybe we only want to give 15-year mortgage loans, or maybe we only want to do this type of a mortgage loan. Because now they're operating for profit and not for what is the best for affordability, your options might be limited as a home buyer, especially if you want to go conventional. Now, I know the argument is, well, you can just go FHA, and that's true. FHA is not changing. At least how we know it, it's not changing. However, FHA also has some really strict requirements because of the fact that they are officially government sponsored, that a lot of times people lean into conventional because they're a little bit more flexible, because Fannie and Freddie aren't directly tied to the government. That also plays a factor into if you're someone who truly needs to go conventional, then the way that you get a mortgage might be changing here in the nearby future. This also affects people who are low income or maybe first-time home buyers, because again, now that we're not operating for affordability and making sure people can buy into homes, the programs that are tied to Fannie Mae and Freddie Mac to serve low-income home buyers have actually mostly been cut already, and if not, will likely be cut, because again, we're no longer concerned about the affordability piece of it, and we're not trying to make this a charity anymore. The government is operating purely on a profit basis with Fannie Mae and Freddie Mac if they decide to go private. So a lot of these programs that Fannie Mae and Freddie Mac do to help basically first-time home buyers, like grants or special programs, or there's a lot of programs that were designed for people who made a certain amount of income, like if you were below the area median income. And those programs are likely to be cut if this change happens, because again, it's not really a good business decision. It was just something that these two entities were doing to help the cost of buying a home for the first-time home buyer, or if you're someone who is low income. Now, what does this mean for taxpayers? Because technically, taxpayers were helping make sure that Fannie Mae and Freddie Mac were successful, because inadvertently, the money that they were paying into the government was used to help make sure that Fannie Mae and Freddie Mac were all right, and that they could turn a profit, borrow money from the government, again, using the funds that the taxpayers put into the economy, that they were able to borrow those funds to go write these loans and then pay back the government. So now with this all happening, there is likely to be less of an expense on taxpayers in the long run, but in the short run, while all of this is happening, likely taxpayers are not going to see any change in their taxes in the nearby future. But with everything that's happening with Doge and the cutting of several different programs and agencies and stuff like that, you would likely see a decrease in the taxes needed should everything go to plan, and should, all of the changes that the Trump administration is making go to fruition. Because again, their big thing is they want to eliminate government spending. They want to make the government more efficient, and they're looking to basically cut programs, divisions, chapters, things that are not efficient for the government to be spending their money on. They're looking for things to cut. So likely this is going to help taxpayers in the long run, especially if all of this, I don't want to call it a stimulus, happens, but basically where they were going to give dividends for all of the money that they've been saving from cutting all of these different agencies happening. This might end up being an actual net benefit to people if that plan does come true. I don't know if it's likely to come true, truthfully, but if it does come true, instead of you paying more in taxes for all these special programs and stuff that you may or may not be using, instead you would likely be getting a check in the mail or getting a direct deposit sent to you from the form of these Doge dividends that they plan to make happen. Again, don't know if it's going to happen or not, but that is the current plan. But if this happens, likely you would see a benefit as a taxpayer. Now, what does this mean for the actual real estate industry going forward? Well, like I mentioned for the first-time home buyers and for the low-income home buyers, likely these categories of buyers are not going to have as many opportunities to buy if they were planning to go conventional. Now, I say that because FHA is still a thing. FHA is still the structure that it's always been. That hasn't changed, and that is truly government-backed. You still have opportunities if you are low income or if you use some of the grants that are associated with FHA. It's just affecting people who are using the conventional loan program or any grants or sponsorships that are associated with those programs in particular. There's still a lot of opportunity for real estate if you are truly using like FHA, VA, the ones that are truly government attached. Likely the rates will go up if this happens. There was a very interesting quote, again, this is from Bessent, the US Treasury Secretary. Right now the priority is tax policy, talking about like if this is going to happen soon. Once we get through that, then we will think about ending the conservatorship of Fannie Mae and Freddie Mac. The priority for the Fannie and Freddie release, the most important metric that I'm looking at is any study or hint that mortgage rates would go up. Anything that is done around a safe and sound release is going to hinge on the effects of long-term mortgage rates. Now, in some of my other videos, I've talked about how Donald Trump's big goal is to bring back interest rates down to, pandemic levels if possible, but if most definitely lower than where they're currently at. With that being said, this change would actually do the reverse, because now the government is looking for that investment from Fannie Mae and Freddie Mac to boost their economy and bring down the national debt, that interest rate that is going to be charged inadvertently is going to go up, because again, now instead of it being the lowest cost opportunity, because Fannie and Freddie are operating kind of like on a charity basis, but not necessarily charity, but they're just trying to basically work with the government to help make housing affordable for most people. But if that's no longer their goal, then that means they're trying to churn a profit. And with turning a profit, then that means that the rate that they're going to charge is going to see an increase in whatever the standard rate is. So I think that this is probably a work in progress for the next 6 to 9 months to figure out, hey, let's bring down interest rates. Let's do everything we can to work on that first. And then we can introduce this to basically help us bring in income once people are starting to buy homes again and feeling good about buying homes again. Like, I think that that's probably the reality that we're facing. This is probably a 6 to 9 month plan. Once Donald Trump brings down interest rates and is able to work on bringing rates down to like a healthy range, whether that's through forcing it by enacting all these tariffs like I mentioned in another video, or if that's just truly the response to the market because of the policies that he's been enacting, then I think he'll make this play and work towards bringing that income from Fannie Mae and Freddie Mac into the actual, sovereign wealth fund that he's already got established and that he's just waiting to basically bring out from the wings. So, some final thoughts. I think that realistically, this is not going to happen tomorrow. I think that we're probably 6 to 9 months out, truthfully, just because I think the biggest goal Donald Trump has right now is to bring rates back down. He really wants to work on affordability and making people feel confident about buying homes in America again. And right now, the biggest obstacle for that is where interest rates are at. So I think that he's doing a lot of work on the back end through tariffs, through whatever means necessary, getting rid of inefficient government agencies. He's doing all of this because he wants to bring down interest rates back to a healthy, normal range, if not pandemic levels, which I think is crazy. I don't think we're gonna get there yet. I think once we start seeing signs that interest rates are back at a normal, healthy range, like I would give it probably like the 5% range. I think like if we get into the high fives, maybe even mid fives, then what I think you're going to see is this plan get really put into motion. Like I think we're seeing the groundwork being laid right now, like Trump assigning that sovereign wealth fund and Pulte coming in and assigning himself as both the head of Fannie and Freddie. Like I think what you're seeing is the groundwork being laid for this plan to be enacted. But I think realistically, Trump is not going to do anything that's going to skyrocket interest rates because, again, a lot of things are tied to the government and how Fannie and Freddie perform. So if people now feel worse about going and buying a home, interest rates are going to shoot up. Stocks might plummet. The way that the market responds to investments as a whole might respond really negatively. And that's not what we want for interest rates to do what Donald Trump wants. We want things to look good. And so realistically, we're probably about 6 to 9 months from seeing this truly happen. But I think that this groundwork is being laid because this is the forward motion for Fannie Mae and Freddie Mac. Like they are going to become a sovereign wealth fund. Now, the only issue that I have with that is that their primary goal now is no longer mortgages. With the sovereign wealth fund, the goal is to bring in as much income as possible to the government. If these two entities become sovereign wealth funds, that means that their primary goal is no longer mortgages. So they're just trying to use whatever means necessary to make that investment good for the government and for the national debt. So this means they might start investing in things like real estate themselves. Maybe this means they invest in crypto and stocks and any opportunity they can to bring income into the government. So if mortgages are no longer the money income driving thing, that means that the mortgages that they actually offer as security is going to drop as a result, which is another reason why I think mortgage rates might go up. I think what you'll see is probably some more Fannies and Freddies pop up. You already see that a lot in the mortgage world in the non-QM space where, if you don't fit the mold of conventional, you don't fit the mold of FHA, then there are other banks and lenders that offer specialty programs, but usually their rates are pretty high and it's usually not pretty standard. Like with conventional loans, they're usually about a quarter of a point different from each other. In that non-QM world, rates can be vary very differently. So I think that is probably what you're going to see if Fannie and Freddie do go private. I think that you're going to see a lot of these other banks start to offer their own type of Fannie Freddie type structures. They're going to be able to charge whatever they want, but this also means that they can actually do what they want as far as like qualification goes. So instead of having qualifications be pretty much the same business, you're going to be able to see some fluctuation there about what people actually care about and that particular bank actually cares about. So, if you haven't been at your job 2 years, that may not be an obstacle anymore. I'm not sure where the future goes with this, but I bet you start to see a lot more banks offer like first-time homebuyer loans, especially these ones that have already been operating in more specialty space if Fannie and Freddie go private. But I think that that's like a 1 to 2 year realization from happening. So I think that we're on the precipice of it, but I do think these things are happening and they're moving forward. So that is why I feel truly compelled to make this video for you guys, because I want you guys to know where is the future headed. And based on my observations, based on everything I'm seeing, I think that this is happening before the end of the year. So if you are someone who is wanting to buy a home and take advantage of these special programs or take advantage of the conventional loan program as it stands right now, you could be on a short time frame here. So I want to make sure you guys are as prepared as possible, make the best financial decision possible. That way, if you are someone who truly needs the program as it stands, you can make that play before any of this stuff happens. I'm telling you, this is going to happen. This is the groundwork that's being laid. So that is it for me today. I hope you guys enjoyed this video. Please make sure to give it a big thumbs up and subscribe and share with someone who might need this info. And with that, I will see you in the next one. Bye!